Hi, my name is Zachary. I'm a local real estate agent in the state of Oregon, and I want to present a housing market update for the month of July. I want to cover the national and economic news, how is the national economy affecting our local market, and then any advice, challenges, and opportunities I see for buyers and sellers today. Right now, in the national headlines, we're seeing a lot of talk about interest rates and how high they've climbed over the last year. In the last 12 months, we've seen interest rates go from 3% all the way up to almost 7.5%, sometimes 8%. And I'll kind of talk about how this is affecting our local market. Home prices are hitting new highs again. This is something no one predicted, and I'll get into why we're seeing homes appreciate so much in the last 6 months. Is the U.S. economy heading for a recession? A lot of people talk about their predictions for the recession. Last year, they were predicting that would happen this year. Now this year, we're predicting recession in 2024. And I'll talk about how a recession could affect the housing market. And then will the housing market crash in 2023? I think this is the biggest question because everyone wants to time their purchase. They want to purchase a home when the market crashes or when it hits, a low. So I will talk about this also. I think we overcomplicate real estate a lot of times. It's really just a supply and demand relationship. Buyer demand is a lot of times affected by interest rates because as interest rates decrease, homes become more affordable. And so more people are trying to, enter the door of home ownership. So as we see interest rates increase, you're going to see buyer demand weaken and vice versa. If we see interest rates decrease, then we'll see buyer demand get stronger. And I just really want everyone to understand that relationship and how interest rates directly affect the housing market. I think this is the most important market indicator to be looking at right now. This demonstrates the supply of homes. In the last slide, we talked about the demand for homes. So demand isn't super strong right now for homes because of higher interest rates, but the supply is so much lower than it has been in previous years. So if you see 2017 to 2019, where new listings per month, they were, up here, and now in 2023, new listings are down here. So we're almost 30%, 25% down from previous years. So essentially what is happening today in our current market is that buyer demand is weak, but the supply of homes is so low that there's more buyers than current homes available, listed. So we're seeing homes appreciate in value. So this is the most important thing to watch right now, because if we see an uptick in supply of homes, then there'll be more supply than buyer demand, and we'll see homes starting to depreciate in value. So it's really, at the end of the day, just a supply and demand, relationship. And you see this home appreciation the last, since 2017. There's a seasonality to it. During the winter months, homes tend to depreciate a little bit, and that's kind of due to the holidays. People don't want to put their homes on the market. Just not a lot of activities happening real estate related. But then during the spring, summer, you see homes appreciate in value. And over time, this is just a linear trend upwards of home appreciation. And where you can see, this is where we're right now for home prices, the median home price. It's right where we were 12 months ago. And so everyone expected homes to depreciate in value when we increased interest rates, but no one expected homes to appreciate in value this much. And this is all just because of there being more demand for homes than the current supply. And that's really all it is. And we'll just see what happens in the coming months with the supply of homes and interest rates. So interest rates, this is a really good, you can see a graph of the last about 50 years of where interest rates have been. And I want to highlight these gray sections are where recessions have occurred in our history. And something I want to highlight is that before a recession, you typically see higher interest rates. And then after we go through the recession, you see interest rates decrease. So You can see that relationship happen during every recession. And I want to maybe talk about if we do expect a recession in 2024, then we should expect interest rates to decrease, the end of 2024, and that would increase buyer demand. So that's something to think about. Maybe you're a first-time home buyer and you want to have a lower interest rate. That's something, to consider, maybe start watching out for. And so mortgage rates should decrease. I don't know when. They might increase still for coming months, but they will eventually decrease. They'll probably, end up being in that 5% range, by 2024, hopefully, and we'll see more buyer demand and maybe more activity with people wanting to sell their homes. A recession does not mean falling home prices. I think this is a really good visual. Out of the last 6 recessions, 4 out of the 6 recessions, homes have appreciated in value. I think a lot of times we think of recession and we think of 2008 and the home is falling 20% in value and kind of crashing and just all that. So I think this is a good picture. 2024 recession doesn't mean homes depreciating necessarily. It can happen, but we'll have to wait to find out. And so what does this all mean for buyers? Continue saving and work on improving your credit score. I think all buyers, if you're looking to purchase a new home, you should keep on saving. You want a larger down payment because that's going to decrease your monthly payment. And then you also want your credit score to be the highest you can get it, because that's going to get you a lower interest rate, which will help you afford more home and have just a lower monthly payment. Challenges are home affordability is an issue right now. Homes are at an all-time high and interest rates are at a 20-year high. So homes have never been more expensive than right now in the last, few decades. Lack of inventory, there's not a lot of homes to choose from. And then homes just keep on appreciating in value. So it makes it more challenging to afford a home. And then opportunities, cash buyers have a huge opportunity right now. They're able to purchase homes and not compete against as many buyers right now because of the high interest rates. So it's a great time if you do have cash to purchase homes. What does this mean for sellers? You can leverage your equity in a few different ways. You can take your equity and directly transfer it to your next down payment, or you could take a portion of that equity and, pay off high interest rate debt. So if you have student loans or credit card debt or a car payment, you could take a portion of your equity, pay off those items and decrease your monthly expenses. And then you would have a tax deductible interest. You'd have a tax deductible interest in your mortgage, and you'd get rid of all your high interest rate debt. And then you could also prepare and stage your home before coming on the market. Paint and new flooring goes a long way, and you could get a higher asking price and have more competition for the buyers, or get more buyers interested in your home when you properly stage a home. And then maybe consider keeping your home as an investment. That's always a good option right now if you can afford your next home without having to sell your current one. Challenges is just finding suitable replacement property. There's not a lot of inventory out there, so it's going to take you more time to find a home that suits your needs. So just have that expectation that it's going to take maybe longer to find your next home. Opportunities selling at an all-time high right now is great. And then people looking to downsize and have a smaller home, this is the perfect time to do this because you're selling at an all-time high value, and then you're able to take the equity that you have in your home and pay cash for your next home, which is most likely, smaller. And this is just a perfect situation to do so with this high interest rate market. So thank you for watching. Let me know if you have any questions about the housing market. I plan on maybe doing these videos every month and just keeping you guys up to date. And if you have any feedback for me or any questions, please just let me know. Thank you.